Hello leaders, my name is Jason Graziani and welcome to our channel, Leader for Life. Today we're continuing on with our series on finances. We just concluded our annuities video on our last section, and this one that we're going to be talking about today is tax-free access. Meaning, Jason, I heard that there's a way to touch my money tax-free. Is that true? And if so, how? We're going to get into that momentarily. 3 quick disclosures. Disclosure number 1, suitability. I can't make any recommendations for any particular product or service because I don't know your individual needs. If you have individual needs, you could contact me directly or contact your agent. Number 2, compliance. Anybody that talks about this material has to be licensed, as I am licensed with the states that I do business in with the Department of Insurance. I am not a securities advisor, and disclosure, I am not a tax or legal professional. So if you need tax or legal advice, you need to communicate with those people. But today we're going to talk about a general concept, not specific numbers or specific tax law, just general concept about how you could access tax-free. Disclosure number 3. The entire reason we're doing this series is to make sure that we can empower you to make a decision that's best for you as it pertains to your financial services. Remember, if you choose to be a leader for life, you're going to be put in a position where you're forced to make decisions that affect other people. If you're struggling financially or you don't have your financial house in order, it's going to be very difficult for you to advise and help people long term because you're going to be worried about yourself. So all of these videos that we have here during this financial series is all predicated on helping you to make better decisions for yourself. So here, let's go ahead and get started. Question that you see up here on the top left. Jason, I hear I could access my money from a life insurance policy tax-free. Is that true? And if so, how? It is. It is true. And I'm going to show you on a diagram how this works. So if I was to use this as a template for a traditional permanent life insurance product, this could be a universal life, index universal life, GUL, it could be some form of a permanent life insurance policy. What you see here is you see your money right here going into cash value, and that cash value funds the insurance or your cost of insurance so that you can have a policy. What we're going to illustrate here is we're going to take that cash value, that blue circle that we have here, and we're going to flip it to here. So this circle that we're referencing is the cash value. And so what I'm doing is I'm going to put a couple hypotheticals in here. Hypothetical number 1, let's just say that there's $100,000 in the cash value. Now, of that $100,000, we don't know how much of that was what you put in and how much of it was interest earned over the years that you were making contributions. So if we take a look, we are putting $70,000 as interest earned, meaning we're assuming that over time, the longer you have a contract or an account or any investment, hopefully the majority of the money that's in there is money that you've earned by investing into that particular product or program. In this case, your money is the $30,000. Interest earned is the $70,000, which totals the $100,000 that you have inside your contract. So Jason, what's up with this LIFO and FIFO? Like what's this on the top right here that you have diagrammed, okay? I want you to understand, as far as accounting terms work, all investment, they're LIFO, which is last in, first out, or FIFO, first in, first out. So the majority of investments are actually LIFO. What does this mean, Jason? What are you talking about? Here's what it means. It means when you go to touch your money, if I had $100,000 in this account and $30,000 was the money I put in, and $70,000 was money that was earned in interest, and I wanted to pull $50,000 out, would it come from the interest? Would it come from what I put in? As far as taxes are concerned, that makes a big difference. So if this was an annuity, and we're talking about life insurance today, but if this was an annuity, it would be LIFO, last in, first out. So what does that mean? Of these 2 quadrants here, what was the last money that went in? It was the interest, because the first money that went in was yours. The second money that went in was the interest on the money that you put in. So for example, if this was an annuity and you wanted to pull money out of it, it would be taken from the $70,000 first. Until the $70,000 was used up, you wouldn't touch your $30,000 yet. However, This is not an annuity, and we're talking about life insurance contracts today. So, life insurance is one of the rare investments that's FIFO, first in, first out, meaning when you go to touch your money, there's a 1 right here and a 2 right here. As far as life insurance is concerned, when you first touch the money, it's the money you put in first. So, number 1, we withdraw the $30,000 first to you. So all the money that you take out first, the first $30,000 came from the money you put in. But now, Jason, what happens with the interest? What happens with the second money? Now, because of the way life insurance is structured and some of the advantages that you have here, here's how you end up not paying taxes on the interest that you earned in your account. If you see number 2, the money that comes out, okay, what happens is the insurance company is going to pull out, let's just say that you've pulled $30,000 out of the account and you've liquidated this component. And now you're down to the $70,000 that's up here on top. But you don't want to touch all $70,000, you just want to take out $50,000 of the $70,000. So what the insurance company does is they take your $50,000 and they hold it in what's called a general account. All life insurance companies have something similar or called a general account. And they're going to pick an interest rate that they're going to credit you to hold the money for collateral. Okay, and you'll see why in a moment. So instead of giving you the $50,000 direct, in which case you would have to pay taxes on the growth and the gains, just like you would in an annuity product, okay? The way that you bypass that product, again, doing this right and structuring it correctly, and go see a professional to make sure you do it right. But that $50,000 sits earning, let's just say 2%. I'm just picking a random number that's similar to what the companies actually do. Let's say 2%. So the insurance company is holding your $50,000. Then what they do is they take $50,000 of their money and they loan it to you over here. Now you may say, oh, so this is a loan then. Technically on paper it's a loan, and here's what takes place. You have to look at the contract of the insurance company what product you're buying and find out, in the event that I touch my money, what is the interest that you're going to credit me on the money I'm leaving with you? And what's the charge of the loan that you're going to give me? And that difference is going to be what you end up paying to an insurance company. Now, most insurance companies that give competitive rates, if it's after 10, 15 years of you having the policy, those numbers are going to be very similar, meaning the amount that they credit you is going to be about the same that they charge you. For example, if they credit you 2%, to hold your $50,000 as collateral, then they may charge you 2% to give you $50,000. So Jason, do I have to pay this back? No, because if you were to pass away or never give that money back to the insurance company, they were already holding your $50,000 as collateral on the $50,000 that they borrowed back to you. So let's recap. FIFO is life insurance, first in, first out. I've got $100,000 total. 100,000 up top. 30,000 is what I put in. 70,000 is what I earned in interest. If you wanted to pull money out of this account, you first withdraw the 30,000 you've put in. That goes directly to you, and because it's after-tax money, there is no tax on that. Then, instead of taking your 50,000 out of your $70,000 interest account and paying taxes, the insurance company holds the 50,000 as collateral, gives you 50,000 of their money. If you want to pay it back, you can, and then it's done. But if you never pay it back, they're holding your money, you have their money, and the net difference is you accessed all of your cash value out of your life insurance contract and didn't have the taxation that typically happens if you had another type of an investment like an annuity or something else that's LIFO. So I hope that this helped clear up the question of, I heard I could access money from a life insurance policy tax-free. Is that true? And if so, how? I hope that today's video answered the question that it is true. And I hopefully that this message was conveyed properly so that you know how. Don't take this particular resource as the only resource. go look up, speak to a tax professional or a legal professional about your own situation and make sure that this applies to you and your state at the time that you're watching this video. So I want to make sure to help you choose to be a leader for life. And in doing so, I want your financial house to be in order. I hope you take advantage of this 10-part finance series that we're doing on being a leader for life. I hope this adds value to your life. If you saw this and you were like, man, that was kind of technical, but Jason took a technical thing and kind of made it a little bit simpler for me, and I could go back to this video and understand it a little bit better. Certain people love this stuff. Some people can't stand it, but it is what it is, and it's there for you. So I hope you share this content with somebody that could find some value with this. If you want to leave us a comment, please subscribe to our channel, Leader for Life. Share the videos with people that need this type of material. And at the same time, we'd love to hear from you. Give us a comment and it could help our executive team put future content together to help you choose to be a leader for life. You guys take care and God bless. Have a great day.